Okay guys, welcome to my first YouTube video. A little background on me before I start going over my trade recap. My name is Matthew, I'm 21. I've been day trading for about maybe 2 years now. I'm not profitable. I'm on my way to profitability and I'm going to be documenting my journey here on YouTube. So far on my journey I've gotten one payout. That was a few months ago. I haven't been able to get one since, so I'm working towards my second one right now. So that's what I'm starting off on in this documentation of my trading journey. Okay, so let's get into it. And background on my trading, I only trade the futures markets. I look at YM and ES, but I only ever execute on the Nasdaq. Okay, so going into today, May 2nd, 2026. First thing I noticed on the 4-hour chart, first of all, we're choppy. We do have, I noticed that we had all this low resistance built up right here, but we're at all-time highs, and I mean, as you can see, all we've been doing for a while now is going up. So I am a quarterly theory trader. I'm a quarterly theory trader. I trade power of threes, and so I guess what I'm trying to say is, even when it looks bearish, you just have to keep, even when you have bearish cracks and correlations, you have to keep in mind that structure is bullish. Structure will always be king. Structure is always gonna, most of the time, determine where the market is going. You should always be trading in line with the market, even if your cracks and correlations don't align with market structure. Market structure always, it always prevails. Market structure always wins. So like I said, we do have stacked LRLR, so I'm open to shorts, but I'm always going to be looking for longs in this market, especially when all-time highs is just right here. And what I noticed on the 4-hour, no crazy cracks and correlations, but we did have we have a EQ correlation with this range here with YM. So as you can see, the YM pulled back into EQ of this range, and NQ has not, giving us a equilibrium cracking correlation right there. Okay, so that's what I noticed on the 4-hour. Now dropping down to the 1-hour, this is when my bias started to become clearer for the day. So we have our true week open. And looking, get this pulled up here. Power 3 is okay. So looking in terms of our daily power 3, we open and go immediately lower, putting in that bottom wick. And as we do that, we put in hidden. I'm gonna put this up so you can see the cycles. We put in hidden weekly cycle, sequential SMT. So hidden is pretty much when you have a cracking correlation with the bodies of the candles and not the wicks. So as you can see, ES on the left here closed below Monday's low, and Q didn't, forming that weekly cycle hidden sequential SMT. So that was the first thing, probably the first major bias determining factor I noticed going into the market open. Also, another thing I noticed, like I was saying here, the day immediately opens lower, we form cracking correlation below our true week open already. So our chances of coming all the way back down here are just not likely. We already opened low. We already opened low and started delivering higher. And then look at structure. Look at structure here. We'll get into structure more as I go on. This is just my pre-market analysis. So far I'm looking, we have hidden weekly cycle, sequential and something. Okay, now we're on a 15-minute chart here. I'm gonna go ahead and pop out NQ on full screen. highs up here. Okay, as you can see, what I noticed here as well, here's where we had that weekly cycle hidden sequential SMT, and then we also have daily cycle. I have an indicator for this, makes it a lot easier. But we have a daily cycle as well. We have daily cycle sequential SMT. We have weekly cycle hidden sequential SMT, and this is all happening beneath the True Week Open. And at the same time, guys, we're inside of a market maker buy model. As you can see here, we have the initial accumulation phase up here, second stage reaccumulation, smart money reversal down here, forming that weekly cycle hidden sequential. And we start delivering back up. We're in our first stage reaccumulation here. So market open, I wanted to see manipulation down, stop raid, form maybe another cracking correlation, and deliver up. So now, looking at this day, the day opened low, like I already explained. We form weekly cycle hidden sequential SMT. We have daily cycle sequential SMT below the True Week Open. The daily power of 3 is looking pretty bullish. So it's safe to say right now that I am bullish. 5 minute here. Nothing to show on the 5 minute. You just maybe get a clearer view of this market maker buy model I'm talking about. And as well, at the bottom of the market maker buy model, we form 90-minute sequential SMT as well before we start delivering up. And we do have 90-minute sequential SMT right here, kind of stacked up on each other, but this is all just accumulation to me, and to me this is all just engineered liquidity as well. I mean, look at how smooth these highs are. This is low resistance, and we do have this 90-minute as well up here at all-time highs. But like I said again, we're extremely bullish on the higher time frame. Like, I have every reason to ignore these sequential SMTs. I'm just playing with structure here. Okay, drop back down to the 1 minute. Okay, so let me play out market open. Market open immediately shoots down, leaving that 930 wick. Let me take this off. Leaving the 930 wick. Let's see what we're delivering from any analogs here. We're just trading inside of one, not necessarily. Right down here. Okay, so 930, we immediately shoot down. So we have our higher time frame sequential SMTs, and what I like to wait for is a lower time frame sequential SMT to form, so a micro. Play out that. Here, we form micro. We tap into True Month Open. Maybe a little lower there. Okay. So here is where I actually wanted to get a first entry in. So we form this micro. So let me take us back to the 1 hour time frame. So first of all, like I said earlier, just to remind you guys, we have the weekly cycle hidden. We're delivering from multiple fair value gaps on the hourly time frame. We are delivering from equilibrium of this range on the hourly time frame, and we also have this breaker block. These two downward candles, swing low, swing high, breaking above it, forming the breaker block. And this is still classified as a breaker block, even though we didn't take out this low, because again we have sequential SMT down here, so there's no need for it to sweep it. You know, this, to me at least, this is still considered a breaker block. Or is that an order block? It's probably it's actually an order block. Sorry about that. That's not a breaker block. That's an order block. I guess I need to do some more studying. Anyways, So yeah, delivering from multiple fair value gaps on the hourly. After we drop down, we're also delivering from this inversion fair value gap on the hourly time frame. So still remaining bullish here. It's exactly what I wanted to see. Like I explained earlier, I wanted, this is our first stage reaccumulation in this market maker buy model. So I want to see accumulation. I want to see a manipulation, which we already had, tapping into the hourly gaps, tapping into equilibrium of this range. And yes, we have doubling up here, doubling daily cycle, but like I said, to me this is all engineered liquidity because we're bullish and we're pretty much trading at all-time highs. We have low resistance above. We already have our daily PO3 that's bullish. So yeah, so we're here. Okay, so we also have a 15-minute swing divergence here. Have an indicator on, like as you can see, we have SMT with that 15-minute candle. Let me show you. As you can see, ES does not take out the 15 candle, and NQ does. So divergence there, which is pretty much what allowed me to drop down to the 1 minute time frame, just using basic time frame alignment, 50-minute to 1 minute. Oh, also, I know we didn't tap into True Day Open, but YM did. YM was already beneath True Day Open, so we have as well a cracking correlation with a true opening. YM tapped into True Day Open. So then we put in our micro. We have everything checked off. We have a change in the state of delivery, and instead of entering off the close, which I should have done, this. And getting I would have gotten some better points here instead of entering like this. What I decided to do was place a limit actually at this, like this, at the CISD, and as you can see, that got edged right there. I actually never got tapped in. So I'm not gonna FOMO into an entry. I'm waiting. Either way, it's better to always to me at least, I found the most success waiting till 9:45. I actually might implement that and make it a new rule of mine to wait for 9:45. Just gonna collect some more data as I keep on journaling and see how that goes. But yeah, 9:45 hits, and let me show you this other thing that kind of allowed me or gave me more confidence. We have swing divergence, like I said with ES, and this candle also closed as a precision swing point. As you can see, the 9:30 candle on NQ closed bearish, and on ES and YM it closed bullish. 9:15 candle bullish, 9:15 candle on 9:30 candle, sorry, on ES bullish, 9:30 candle here on YM bullish, and it's bearish on. So that was pretty much all I needed. I saw that we made a fair value gap. This gap was actually an SMTF. SMTF meaning it is a fair value gap. SMTF can either be when one asset taps into the gap and the other doesn't, or an SMTF can also be if one asset forms a fair value gap and the other doesn't. So as you can see, at 9:44 we have this bullish gap, and on YM we have nothing. So this is SMTF. It's basically just a more high probability fair value gap from my experience. So then I placed the limit here. Placed the limit right there. I believe, I don't remember exactly where my stop was, but I know my RR was. Targeting all-time highs, about 200 points. And my, was a little bit low, yeah. My RR was a 3.1. And it's up into there. Pretty much a zero drawdown entry. I went break even once we ran all this low resistance. Gosh, After we ran this high, the high of this low resistance here, that's when I moved stops to break even. Slow one today, so there, I already had moved my stop loss to break even. And I'm gonna start skipping it by a lot more because you can see I was in this trade for a very long time. Got a little sketchy at first, I'm not gonna lie. I was a little sketched out. That's one thing I'm still working on, I'm still developing on, is I guess I kind of have like PTSD in a way, because I swear I'm always getting, at least recently, the market has been getting right next to a drawn liquidity and reversing. So recently with every little pullback I get sketched out, but I gotta really learn to just kind of let it play out, let that go, you know. So you can see, like I said, we are in this trade literally forever. I was at work during this. I entered this trade on my phone. I opened today at work. And then we finally hit, wow, there. So we were in this trade from 9:46 to 11:55. So about a little over 2 hours that I was in this trade. So like I said, guys, that's pretty much why I entered that trade. That's my model there, just playing with structure, waiting for the right sequential SMTs using my time frame alignment. I'll just go over it one more time. Just a quick recap. 4-hour time frame with this range here. We have equilibrium, cracking correlation with YM. YM retraced into EQ over here, as you can see, and NQ did not. Dropping down to the 1 hour. We have our daily open. We go down. We create hidden weekly cycle sequential SMT, and we're also delivering from EQ of this hourly range right here, delivering from multiple fair value gaps, inversion fair value gap, 1 hour order block. Dropping down to the 15-minute daily cycle SMT, daily cycle sequential SMT. We have cracking correlation with true day open. YM came down, tapped it. 15-minute swing divergence, 15-minute precision swing point. Daily cycle, daily cycle sequential SMT. We have market maker buy model, first stage reaccumulation, we manipulate down, read stops, rebalance the range. 5-minute wasn't much to show. We had some swing divergence here. 90-minute cycle at the bottom of this market maker model. Low resistance liquidity, bullish, entry, microcycle, sequential SMT, 1-minute SMTF, and that was entry. So I believe on this trade, let me see, I have it pulled up on my other screen here. I believe on this trade I made $704, and that is on an eval. I want to make that clear. I'm not trading on a funded. That is on a challenge account on a Lucid Flex 50K. I know I'm in replay mode right now, but as you can see on my TraderVate account. Let me exit replay mode. So I made $704 today. I mean, no, not 704. I made 774, which took me out of the drawdown I was in yesterday. I took 2 losses. I was down 2R today. Made a little more than 3RR. So I'm up $704 on this eval. And yeah, I hope you guys enjoyed. I hope you guys got something from this. I'll keep trying to make these as frequently as possible. Hopefully I can help some of you guys out there kind of in the same situation as me. And yeah, that's it. Thank you guys.